YouTubers, Mike Martins here, Mike Martins. And don't forget to join me for Mike in the Night tonight, Saturday night here, Western Seaboard time, 9:30, depending when my kids go to sleep. Don't forget to sit back, relax, and enjoy tonight's show. We're going to have a few guests on. Anyways, property investor losses soar as market slumps, costs rise, and sentiment sours. What is going on here? By the Financial Review. It is the news website of the year. This was sent by my brother down on the ground there in Australia. Boots on the ground. An apartment glut. Falling prices and slowing demand has almost tripled the number of off-the-plan Sydney apartments valued at less than the purchase price. Analysis show. Boom! Underwater, like I've been saying for the longest time. Underwater. Why are people paying 25 times, well, okay, let's get conservative about this. 16 times their income to buy a property. Give me a break. Core logic. Research shows more than 14% of Sydney apartment owners' resales are at losses. Underwater. A rise from 11% the past 18 months, as well as the number of the all the plan apartments that were valued at settlement below the price in the contract has jumped from 11% in April last year to 30% last month. Guys, what have we been talking about the last 5, 6, 7 years? I jumped on the Australian bandwagon 3.5, 4 years ago because all these abnormalities happening. Nothing's adding up. Why are houses being left empty? What's the deal with investment properties? This never existed 30 years ago. Yeah, you rent it out. You don't leave them abandoned and empty and board it up and leave Christmas decorations on your house for 3 years in a row. Come on. Core Logics, I read that. That is before the various sale holding costs can add another 10% as new apartment supply reaching settlement peak in Sydney and Melbourne. Amidst the weaker housing market conditions, tighter finance, fewer domestic and foreign investors, and subline rental conditions, we could see loss-making resales across the sector trend higher as well, said Tim Lawless, Director of CoreLogic, which monitors property markets and prices. Separate research and commissioned by the Australian Financial Review from Digital Finance Analytics and impacts the existing borrowers further 20% of the property prices from current prices. Percentage of property owners in negative equity prices falling by 20 points. There it is. ACT District, 51%. Western Australia, 47%. Northern Territory, what is that? 45%. New South Wales, 42%. So Victoria, 41%. Queensland, 35%. So there it is, people. Perth, hit the worst. So we all know about Perth, guys. We understand what happened with Perth with the whole mining collapse and basically the mining industry went nuts. I got my brother down there, who's another friend of mine out there, who was on our show a couple of times, who is in Perth, Australia, who has been commenting on what's been happening in the housing sector himself and telling us how housing went through the roof. Then I got another friend from north of Perth, about many hours drive, I think a 7-8 hour drive north of Perth, who was telling me the same thing, that housing in his little town in a mining district went nuts. So let's move on to opportunity in falling prices. Is there an opportunity, guys? Guys, don't jump on the bandwagon too fast. Guys, if you've been watching me for the last couple of years and what's happening with this abnormalities in this housing market and this quantitative easing and the record low interest rates are going to have to go up or the Australian dollar is going to get crushed. So here's the deal, guys. If you've been listening to me for this long already, then hand to God, thank you, because I don't know how long I can listen to myself for how long. But anyways, to be very frank with you guys, maybe you want to sit back and just hold off for a little longer, because opportunity in falling prices, it's still too expensive, guys. Sam Saliba, a company director who has 8 properties in his portfolio, said falling prices created opportunities despite his having recently lost money on an off-the-plan purchase described as a mistake. Mr. Saliba is considering selling 5 properties in Hobart where prices are still rising. Remember, guys, everyone went to Tasmania, right? Because they couldn't, the mass exodus from Sydney, Melbourne, and all those cities, everyone had to find a cheaper place to live. So Tasmania / city of Hobart's been out of control. So, and in Albury, an advantage of the lower prices in Sydney, which until the slowdown were too expensive. I see this opportunity, Mr. Silva said. A lot of people are going to have to start refinancing, and there are going to be a few buyers in auctions. I'll wait until after Christmas, and then I'm gonna pounce. Losses and volatility are worsening as the markets respond to tightening bank lending, interest-only borrowers switching to principal interest, a cutback in foreign demand, out-of-cycle increases, falling prices, and expectations that negative gearing and capital gains tax concessions will be made less favorable. In addition, a near record 270,000 dwellings under construction, of which about 70% of the apartments are primarily in Melbourne and Sydney, is increasing, and the risk of the planned property buyers might be able to settle. Many of these apartments would be able been sold off the plan, Mr. Lawless said. Mr. Lawless. This was at a time when housing conditions were much stronger and credit conditions were not as tight, with so many units in the pipeline. At a time when overall housing market conditions were weakening, settlement risk heightened. Off-the-plan deals work while buyers are rising markets because they can lock in a purchase price, but those who put down a deposit for the current downturn will have to absorb the market losses or sell. Buyers who cannot settle will likely lose their deposit and could be sued for any costs, including the difference between the contract price and ultimate selling prices. So here's how it works, guys. First, before I kick off how it works, I want to talk about it is springtime right now. It should be a buying frenzy right now. Well, no one's buying right now in the Southern Hemisphere because it is just too damn expensive. Who's going to pay 16 or 15 times their income for a property? That is ludicrous nuts. And in Vancouver, I think it's even higher because the minimum wage in Vancouver is like $11. So, or $10.25. I'm not sure what it is, but I'm saying in Vancouver it's very expensive too. So people on the sidelines thinking it's ready to good time to jump. No. Wait till Q2 and see where it's at. I got an exercise for you guys. I taught this to a few people back in the day. I want you to find a property that you like that's listed with a price and the whole 9 yards. Okay, do this exercise. Print off that property listing. Print off, make sure it's got the price on it, how many days it's been on the market. Make sure it has everything, all the information of the house that you want to buy, okay? Put it up on your wall. I want you to look at that every single day. Then every month, I want you to go back and find that property and see how much it's gone down or how much it's gone up. If the property has gone up 2 times in 1 quarter, within a 1 month gap. So check it 1 month later after you print off the thing, and then wait a month, and then check it the next month later. If the property price went up twice, then I say it's safe to buy. But if the property prices dipped twice in that 1 quarter, and the house you're following has been relisted, and make sure you check comparables in the area to make sure you can look at other pricing in the area to see if those are dropping too. Then you could take all the comparables and then you could put together a mathematical equation that could tell you whether or not that property is safe to buy. I don't think, if you see them drop, be careful. Be very careful, okay, guys? Because a lot of real estate agents won't tell you this stuff. So look at that paper every day. Okay, house, what are you at today? What are you at next week? What are you at? After, if it keeps dropping, you're just going to have to wait until you start seeing stabilization in that house. If that house sells and you miss it, look at the comparables you did, and look at the comparables and see if they are starting to settle and simmer at that level. That's the best way to do it, because especially with different pockets of availability, different pockets of supply and demand, different pockets of how and where to purchase, different pockets of volatility, different pockets of pricing. So this way, you have your comparables in that pocket of area, and that'll give you a good area, a good assumption of what to buy. So print it off, just like this. Print it off, throw it up on the wall, and every day, and then print off a few comparables if you guys want. Print off a few comparables. It doesn't hurt. Houses within a 2-3 block radius of each other, same square footage. You could put a couple with bigger square footage and see if, damn, if I bought that house 3 months ago, I've had waited 3 more months, then I would have bought this house that's bigger for the same price. So you got to start looking at comparables, guys. So get a lot of people asking me the same questions. What should I do? Should I buy? No. Follow the market, follow the trend, print off a few pieces of paper, throw them up on your wall, and kind of follow the trend on how it goes. Because I get a lot of people messaging me. I get about 200 messages a day on average, and it's really hard to keep up with everybody, because I love you guys. I like everybody on this. I like everybody. Everybody has a chance to be on my show. So, guys, tonight is Mike in the Night, Saturday night. We'll be talking about all kinds of stuff going on. Add me on Skype if you want to be on Mike in the Night. We'll be talking about tariffs. We'll be talking about money laundering. We'll be talking about voter fraud. Whatever you guys want to talk about. Add me on Skype, Mike Martins 1980. Anyways, thanks for watching, guys. I really appreciate the support. And don't forget to hit the subscribe button.